again. This is the Crypto Dolphin here. Today I'm gonna show you another part of my series of what to do now, since the market is a little bit broken down for all crypto traders. In the past video I showed you more or less how I saw the market. I'll do a small review of how I see the market right now and an option I'm taking right now. Just to be able to make some money. And last time I talked about how the market was looking in within this framework by analyzing the total crypto market cap and how it's been doing, just like lower highs and lower highs and lower highs, and I'm actually not expecting much from it, to be quite honest. We could put some stuff here. Okay, well, seems like we've regained the 200 EMA, which is actually good news. But I'm still not expecting much from the total crypto market cap. There are some signs of bottoms here and there, in few alts and some BTC. But I'm still not too confident. I still think that we can break lower. I'm recording this video on Monday. No, not Monday. On Sunday night. It's 1 hour past midnight right now. So the U.S. hasn't opened yet. I guess we'll know what happens in a few hours. But as for the moment, I'm gonna make the best out of this opportunity for some delta neutral strategies that I'm gonna show you. So yeah, this is what I'm seeing, the total crypto market cap. This is what I see for alts. There's something good about alts as a whole that I haven't mentioned before, and it's this is something to take into consideration. This is just a zoomed out look of how the alt market behaved in the past bubbles, if you want to say it, in the past cycles. Here we have this like this small movement that led to the 2014 just peak and climax over here, and then this is what we consolidated into for 2 years, almost 3 years, more or less. And after consolidating for 3 years, we had this one hell of a bull season, for one hell of an alt season. You can see it over here. This is more or less from June 2016 until December 2017, more like January to 2018. This is what we had, and I just extrapolated the same behavior, assuming we're gonna have something like that. Just remember, the volume grows exponentially as more and more people come into the market. So we had a massive move, and if we look at it from where we are right now, we're more or less, if we were to compare, we would be like here, more or less like here, like this spot over here is where we are right now. Or some people would argue we are here, if it's gonna be repeated, because there's no guarantee that everything's gonna be repeated. But it would be kind of weird to have seen all this consolidation from 2000s, after 2017. So 2018, here we go, 2019. Then we started moving in basically we bottomed out on March on 2020. And that's when we had the hyper mega crash, and ever since then we've been in an upwards move that knows no competition, right? If we only grew this amount, if we only grew like this amount from consolidation, uh, it will be sort of disappointing. But at the same time, we gotta understand that since there's a lot of alts right now, like the amount of capital is absolutely ridiculous. It's not the same saying billions to saying like trillions. And as I showed you in the last video over here, we um, we lost 1.38 trillion. I remember like waiting for the total crypto market cap to get to a trillion. There's a lot of I don't want to say about it, like fake volume and fake numbers when we do these calculations, due to how the supply works. But even then, and some ETFs that are inside the calculations that shouldn't be included. But even then, we're talking about like $1 trillion out of the market, right? And then we see this, right? We see this, and if we only moved like this amount, it will be nothing in comparison to what we saw before. But even then, everything that happened here could take like a lot longer. It could take a lot longer. Just like this consolidation just took like uh what, like 2 years. This one took like 3 years or so. This could take a lot longer, and we maybe it doesn't happen, right? If we look at the chart on a little bit closer, it's not looking any better, really. I'm expecting us to range. If we're gonna continue, we're gonna range all over this place, from EMA to EMA. So this is, personally, I don't find this moment a good moment to be trading alts. I think a lot of alts, like for example Aave, if you check them with the volume profile, you'll see that a lot of those are not doing like really good, and they just have the liquidity stuck in like really low prices. So just be careful if you're playing alts. Make sure to have like really tight stop losses, and make your stop losses go a little bit below, because when, if it falls, the price is gonna rush so hard to the downside, that your stop limit order might not hit. So you better be on the lookout for that. Don't we're still in we still don't have any bottom confirmed on any alt. The one cryptocurrency that's looking a little bit more decent than the rest, it's called Ethereum is actually not looking that bad. So if you're gonna play anything, make sure it's like ETH or maybe Matic, due to how much it is needed to do the current farming opportunities for decentralized guys. So yeah, that's something to take into account. But right now, I came up over here to show you an opportunity I'm looking at right now. So we see gold. If we check gold, I already told you about it before. We're doing this sort of range, and we've been moving up ever since BTC fell. Gold has been going up. Coincidence? It's not a coincidence. It's not a coincidence. We are likely to keep going up, even if we're highly overbought. Even if we're highly overbought. So what can we do about it? I already told you guys about the mirror strategy, the mirror protocol strategy. Today I'm gonna teach you another delta neutral strategy. So I'm gonna be checking over here just to check the different funding rates to see if there's any opportunity. I think it should be over here. Yeah. So this is basically the gold tether. So this tracks the price of gold, and it's a perpetual, and it's also like a tokenized. It's a tethered price exposure to gold that FTX offers, right? What do we see here? We see a collateral weight of 95%. We see a predicted funding rate for the next hour of 77.96. We see in the next hour for 85.85. Then on the 24 hours, we see 70.70%. On the 3-day, we see 17.50%. On the 7-day, we see 5.78%. On the month, we see 33.59%. On a 90-day basis, we see a 49, almost 50%, and on an all-time, we see a 2.08%. So what do these funding rates mean? These funding rates mean that we're basically getting paid to hold a short position. So in my dictionary, we're getting paid to actually hedge. So what did I do? Well, I just for the sake of this small tutorial here, I basically transferred some money from my main account to an account that I just named Delta Neutral over here. And well, here's what I'm gonna do. We see gold, right? And I'm actually, since it's not gonna be moving a lot because it's the weekend, so I'm pretty safe here. I can put it on a minute chart if I want it. It's not gonna move. It's not gonna move too much. Like if so, I don't worry about it. So let's say 5 minutes to make it less of an hour. Okay. So we move here. We put 1908 $1,900 basically to buy this right now. So I'm buying this over here, but I don't want it to be, wait, I don't want it to be USD ZAL Tether gold. I was expecting it to be with USD, not with USDT, but here we go. So I go with my Delta Neutral strategy, and it's moving. Not liking that, but it is what it is. So I'm gonna take a position of amount. I'm gonna take 500, right? I'm gonna take 500 of this position over here. So it should be, no, it should be this. It should be this. I don't know why. What am I doing? Yeah. So I got this, right? And I want to make a $500 position, which is basically half of what I have in this sub account at this price, right? That's gonna give me 0.2619 gold, right? So I place this order. It should fill. I basically took all the there's not a lot of spot volume here. There's really not much of spot volume, but at least it went back to where it should have. I I hope I was not too screwed on that movement. Should have done like a limit order instead of a market order, but it's okay. Then we go to futures, and then we go to okay, this is a stock. We go to futures. We go to Tether gold. We got a perp, right? We got a perp right here. So it should move in tandem. Let's say there's a premium for this, so that's also something interesting, something rather interesting. And I'm gonna push. I'm just gonna push this position and buy the same amount. I'm gonna buy the same 500 that I bought. It's exactly the same position that I'm gonna sell on a short, right? And I'm gonna set the order, and boom. Right? So what's gonna happen here? Right now there's not much volume in the spot, but here's what we have. We have an index price which is 1908, right? We have a little bit of a premium on the perp, but basically I'm basically using my my spot position as I'm basically using my spot position as a collateral for this movement right here, right? And yeah, I got $500 on extra on this account, which, I mean, I could simply go to South and just do this. Like, it's just yes, I messed up there. Sorry. But hey, we should just go with a 500, which is everything I have left on this account. I'm probably gonna drive the price up again a little bit. But it's not gonna matter much. It should not matter much. So we go with a 500 order, right? Over here. It should normalize again, going down. Boom, boom, boom. Yes. And then we go to the perp. And what we do right here is that we sell more on the 500, right? Nope. 998. So yeah, got a little bit messed up there. Sorry, but I should have just like bought the whole position. Okay, no. Okay, so what I've done is that I basically bought the whole position, and no. Yeah, so basically, here's what's happening right now, right? So I got my per position. So I basically bought some gold, right? And with that gold that I bought, I'm hedging myself by shorting it. Why do I short it? Because I'm getting the funding rate out of it. So if the funding rate is keeps being positive, I will get paid that. And since it's the same size as my position, if the price goes down, then the short will just like keep going, right? And when the price goes up, it doesn't matter because my short because it doesn't matter that my short is losing because it's covered by exactly the same amount that my gold position has, right? So basically, this is what we call delta neutral, and I'm getting paid the funding rates, which is the nice thing about this strategy. Uh, I do not worry about if the price goes up or it goes down. I only worry about the funding rates going from negative to positive. And as we saw over here, we can see that gold actually has been having like a really really good funding rate so far. It's been going down, but it's you should check like the 24-hour, the 3-day, and the 7-day. So if everything goes all right, at at the very least, I could expect in the week to have yeah to have some money to have that after 1 week. I would basically get paid this. There's also other opportunities to be to be taken, but so far this is a very safe one. Very 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 safe. Uh, there's not much to say. Those are delta neutral strategies. You can also do this with other positions if you want to. I just decided that I wanted a gold position and I'm getting paid to hedge, so why the hell not, right? Uh, so let's just push this. For example, right now we got we got a decent we got a decent opportunity, but with really low volume, to move with DMG perp actually, because it's been paying very very well, and it doesn't seem like it would change anything. So I might I might take a delta neutral position and just like basically hoard the funding rates, just buying some DMG, then shorting it, and then I just get the funding rate. I don't care about the price, exposure or what happens. I don't care, because it doesn't affect me. Like they're correlated, so it's really doesn't matter. I get paid the funding rates, so if you allow me, I think I'm gonna go with one of these ones. It's been doing very well. I want to see this SRN perp, this DMG perp, and let's see what they got. DMG USD. This should look like absolutely awful. Yeah, it looks absolutely awful. So yeah, I'm actually gonna buy a position here. I'm gonna short it, and I'm just gonna hoard those funding rates for some delta neutral profits. There's also there's not much we can do with that volume though. Anything I buy with that, it's gonna move the price up, so I gotta be careful. I gotta be careful, but hey, it is what it is. So yeah, so then we're gonna go check SRN. What the hell is SRN? SRN. Just a range. I don't even know what this is. But we're getting paid very well to short the. No. Never mind. This is not a good one. Yeah, this is not a good one to. It's not a good one to do this delta neutral strategy. I'm personally gonna go with DMG, and I'm gonna do some delta neutral strategies. So, and perhaps if I hold a position for the whole week, I might do 122%. Which, I mean, it's not 122%. That's annualized. That's an annualized rate. But even then, it's basically risk-free. And if whatever I earn from it is just gonna be like simple. So let's say out of that 122, it's got divided by 50. So I don't know. I might get like some. I don't know, like some small percentage. I'll get some small percentage, honestly, but hey, it's basically free money, so why not? That's all I wanted to cover today. Next time, if you want to support me in any way, shape, or form, I'm gonna throw an FTX affiliate link on the description. This link will give you a discount on fees. It would give you a discount to you and a discount to me, and it helps support me. It helps to support me. So if you think this has helped you in any way, shape, or form, you can use it if you're not using FTX yet. And if not, it's okay. Just give a like, comment, subscribe, or whatever. whatever you think it's good. I'm gonna be trying to give you other lessons into what to do, uh, in order to make money while we're on a bear market. So, for instance, I got another account right now. I just emptied it. Uh, for lending, you can actually have your positions over here, and you can lend. You can lend them. So basically, for instance, you if you have like a Terra position, because I know a lot of the people watching this video do have some Terra position. Wow, it should be here. They're not. They do not have it over here. But okay, it's okay. There's a lot of positions over here. Uh, there's a lot of positions over here. That if you have any of these positions and for some reason you don't want to sell, you can lend them. You can lend them at different rates. Sometimes the rates are super high. Sometimes the rates are super low. Like for instance, BNB lending right now goes for a 30%, which is quite high. USD and stablecoins, since the market is a little bit just like very chill right now. There's like nobody, or there's little if anybody, just like longing or shorting or doing any margin. The rates are really low. But for instance, if you have some Tether, you could be lending your money at a 4% annualized rate. Sometimes this goes crazy. Sometimes it goes to 50%. Sometimes it goes to 100%. Remember, funding rates and lending rates of subsequently are on an hourly basis. They do a lot better throughout the week, and right now they're not doing too well. But okay, like if you have any position that you don't want to sell, that you want to keep, and you want to do something with it, you can lend it. You can do some margin lending and get some money for it. It will be locked for the next hour or so. It's not that big of a deal. Yeah, and yeah, that's like for instance, Yiffy's got a 15% right now, not too bad. Uh, Tomo has a huge percentage right now for lending. That's interesting. Aave has a huge lending rate right now as well. So like if you have any of these positions and you actually want to get some money out of it, you can do some margin lending, and then just like get paid to lend your position. Like same here over with Leo, Matic, and others. It's pretty easy. What I usually do is that if I have any extra stable coins, I'll just like set them at least one part of the stable coins I have. I would put it on to lend at a margin lending account, and that's it. So I just do like the lending, and then yeah, that's basically what I do. Other things that you could do right now with your stable coins, or if you want to do something else, I already talked about mirror strategies on the past video. On this video, I could talk a little bit about BlockFi, Celsius, and Anchor. I know a lot of you probably already. Anchor protocol. If you're a Terra Luna user, you know the deal. You can set your money on earn, right? You can set your money on earn and earn anywhere between 18 to 20% APY interest on your savings. If you don't feel safe, well, the smart contract risk and the stable coin peg are already insured by on Slash Finance. So I already showed you this last time, but I'm gonna do it correctly this time. On /finance. So here we go. How it works: no bureaucracy, just insurance. Need to shield yourself. This, as I said before, is an insurance protocol for more B2B oriented stuff. So like Terra is actually partnered up with Unslashed. Like they're the ones buying the cover for this, right? Then we got Nexus Mutual. Which is focused. It's the biggest insurance protocol so far. It's more B2C. So this is business is business. Nexus Mutual is business to client to customer. So you can actually get a quote. And if I were you, I would go with DAI, because it's a little bit more stable, and they're basically making their reserves. They're backing their reserves with actual money now, the USDC, which is in a way more covered. So I would pay, like, if you're not feeling safe and you actually want to have some saving yields on your stablecoins without a centralized solution, because this might be something tax heavy for some of you, I would recommend paying your taxes anyways. But if you're not, like, if you want something decentralized just for the sake of decentralization, for safety, for whatever you wanna call it, then I would suggest just put your go to KuCoin or any on ramp and just change your stablecoins for UST and put your UST over here to get some AUST, and you can get that AUST insured over here without buying a cover. So let's say you believe that the whole market is, it's already gone, right? It's the bear market and it's gone, and we're not gonna have anything for more than a year, for years or whatever. I do not think that, but if you think that and you want to get a cover, then you can do so over here and just like buy a cover. The only flaw I see that you can only get like 2.2 million dollars per cover, but I mean, that's not too bad. Like, if you're making that much money, like, come on, you're doing good. This is bound to go a little bit down because it's based on ETH. So just for the record, so you can basically insure whatever you wanna insure. Perhaps you wanna insure it for 30 days, and you wanna insure, let's say, I don't know, you got $1 million that you wanna insure for 30 days. Yeah, it shows insufficient funds because I'm not connecting any wallet, any MetaMask, or anything right now. But you would have to pay this amount, right? Which is 4,785. And yeah, that would be for 30 days. If I wanted 90 days, if I wanted a whole year, and that's how insurance works, right? So if I had $1 million, probably the best way to cover yourself, and it's the safest and the most decentralized, is just using Anchor. Putting your money into Anchor. It's already insured by /finance for smart contract risk and on stablecoin peg insurance. And I would insure myself on Nexus Mutual for a 6%. So you will be basically getting anywhere between 12% and 14% on your savings, which is a lot higher than any bank, and it sure beats like Celsius BTC. sure beats Celsius, and it sure beats BlockFi, which are the current centralized market leaders, and it for sure beats like any alternative that any exchange gives you. So yeah, that's basically those are basically the opportunities that you have. So earn up, let's say for BlockFi interest accounts. So you got service products, BlockFi interest account. See how much you can earn. So if I go with some USDT, which is what most people do, um, I wanna do it for a year, right? I wanna do it for a year, and yeah. So you would basically get, what is this? What is this? 9%, nine point, yeah, 9.30%, which is lower than what you get on Anchor. And if you go on Celsius, well, you get a 3.5, which they they make it sound like heaven, but you could get a lot more. You could actually earn almost 11.21 APY on USDC, which is actually pretty good. That's actually a pretty good rate. I'm not gonna lie. That's yeah, that's pretty good. That's if you earn. Oh, okay. This is where it's going wrong. So it's 11% if you get your rewards or your coverage or your interest. You get it paid in Celsius, which is their own coin. But if you want them in USDC, which is what I would recommend, you would be having 8.88%, which is below what you would get from Anchor. Like even if you insured yourself for that amount of time. So yeah, basically this I hope this is a better video. I'm sorry that I messed up a little bit when I was doing the gold position over on FTX. I just wanted to show you different strategies. This is what traditional finance is all about, like going delta neutral, getting coverage, doing hedging, and like I could be selling all these strategies and just like many people are doing that shit, but I don't like it. Uh, but if you want to support me in any way, like just use one of the affiliate links I'll leave, or if you want to donate or something, I don't know. Should I include like I don't know, like a Terra address or something? Well, in any case, these are my recommendations, and I hope that you have learned something, and that earn, you earn, and you keep making money. So the show goes on. And yeah, the market is not looking hot right now. I know the market is not looking hot. But hey, it is what it is, and we'll still make money. Don't worry too much. Um, so yeah, I think that's it for today, and have a nice day.